Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 8th, 2009. AccendoTraders.com, effective video, technical analysis trading plans delivered daily. Each time we come together, we want to prepare ourselves for the next trading session. We do that by looking at our existing watch lists and setting a stops for those. We want to see what's going on that could possibly move our positions one way or the another. On the weekends, we want to check the blogs and newsletters, see what the experts are saying, look at the sectors to see if any sectors are making a move. We always look at the three major indexes. We always scan for new trades, not just scanning for them, but specific trades for the next trading session, set alerts for those trades, and as always, we want to make sure we have time to spend with our families. So the week that was ended up for the week just a little bit, but that little bit got us up for the year on the NASDAQ, 0.9%. Let's be happy while we can. Basically, the month of February has floated in on wings of love. If you remember, January was down all 4 weeks, and so to have our first week up is certainly something good to be looking at. The financial sectors were up 6%, and this is certainly has to do with the announcement that's supposed to come out tomorrow from Treasury Secretary Geithner to talk about the second half of the TARP. This is that long-awaited rally that could be sparked by what he has to say in the stimulus package. This is also interesting because there's been no confirmed specifics, so we know he's speaking tomorrow, and you know the stimulus was supposed to pass Friday, and then maybe Sunday, and now maybe tomorrow. All this, there's still a great area out there, but you know people are still hoping this is going to be our long-awaited rally. We have more earnings, disappointment: Disney, Kraft, Costco, Cisco, Ryder, and others. Economic data, we already talked a little bit about this, but on the positive side, we had ISM and manufacturing topping expectations, pitting home sales topped expectations, fourth quarter productivity top expectations. But the big thing was on Thursday we had initial claims rise to 4.7 million, and we had on Friday the payroll numbers showed a loss of almost 600,000 jobs, 598,000. In the month of January, and that's the largest in 34 years, and unemployment rose to 7.6%. So certainly the market shrugged it off a little bit and rallied pretty hard on Friday, again in anticipation of this government news. So nothing tomorrow, so all we got is Treasury Geithner, so see how the market reacts to that. Really nothing really huge this week. Again, I think the market's going to be reacting to the government news. Earnings-wise, we don't have a lot going on. We do have Baidu coming up this week, and a couple coal stocks and agriculture stocks that we like to watch. So let's take a look at what we got here. First up, we've got the Dow, and the thing about the Dow is you can see that we still have some room to go here, about 200 points to get to the 50 moving average. Obviously, we're still in a downtrend. We have not made a new swing high yet. If we get up here to the 50, that would be a new swing high. Our support here that we talked about all for the past 2 weeks held up, which was around 79.50. And we're going to see what this news by the government brings us. When we go to the NASDAQ, you're going to see a little bit more strength. And looked at, we've been talking about this range for several months now, and look where it closed. I mean, we did make a new swing high. We did pop above the 50 moving average, but we closed right here at this 1600 range of our range, tight range that the NASDAQ has been in. And as the NASDAQ leads us up, we'll see if it can bring the rest of the market with us. Now 1650, you can see here is our absolute last swing high as far as the year, January high. So we've got some room to go to get to there. But again, obviously looking at a move like this, what does that look like? Well, it's looking like the market needs a pullback. Here's the S&P 500, did not make it above the 50. So the NASDAQ is above the 50, the S&P and Dow Jones are not. The Dow still has a little bit to go to make a new swing high. We'll see what the resistance of the 50 will be. And since financial sectors are the biggest percentage of the S&P 500, we'll see what Geithner can do tomorrow to move us higher. Now, with sectors, first and foremost, I want to show you agriculture. Look at where we have come from December. Just a great uptrend. Remember, we have earnings, AGU this week, CF this week, and obviously you're going to watch POT and MOS on this one. Also, a sector to watch is metals. Above the 50, making a new swing high. That looks good. Steel and iron, making a new swing high above the 50, looks good. Of course, we know gold looks good. AEM and ABX. Biotech, look at this consolidation, could be finally breaking out here. And finally, internet is another sector to watch. Obviously, Amazon is going to be leading the way here. Just wanted to give you a quick look at the futures. We have the ES here, which is the S&P futures, and they're down about 5.5 points. We are getting up here to the overbought range, already there on the RSI. Stochastic's not there yet. And again, with the two big updates like that, a pullback is reasonable. However, the news from the government, Geithner, the bailout, all that will override everything. News overrides everything. Here we are with the Dow, not quite to the overbought range, but certainly a pullback could be in the range. And the Dow is down, the YM is down 45 points. Okay, so now we're ready to go on to the educational portion of our video. We're using the book Trading in Zone by Mark Douglas. And we're on Chapter 5, The Dynamics of Perception, and we're talking about the power of association. And what we're talking about this week is probably a dilemma, a situation, an event that every trader goes through. And the difference is for a successful trader, a professional trader, and a new trader, an experienced trader, a frustrated trader, is their ability to navigate this and successfully accomplish this, beat this, and then move on. And that is a scenario of you are in watching the market, you got your charts up, you're sitting there, and you, in the back of your mind, you have the knowledge that your last 2 or 3 trades failed. Didn't make money. Pick them out how much you lost. Doesn't make a difference. Just the fact that the 3 trades didn't work out typically is enough. And as you're sitting there, and you've got the video technical analysis trading trade for Accendo traders, and you set your alerts, and your alerts go off, and you start watching the stock, and then once your alerts goes off, you start to look for chart patterns to confirm your entry, and boom, you get your entry. Do you pull the trigger? See, successful traders are able to pull the trigger. Those who are still struggling typically begin to pause and hesitate, and they begin to think to themselves, well, do I really see this? Is this really what I think it's going to be? And then they start weighing in things. I heard this on CNBC, or my cousin Louie. Things that have nothing to do with their trading plan start to seep in their head and almost works against the trade. But meanwhile, the market's still moving. Remember, the market is a stream of data. It doesn't care about you. And as the market's moving away, your safe entry now becomes risky because it's moved on. And now you're battling, not only should I still get in, but you're battling the fact that you didn't get in, and you're worried about the money that you lost. I've already lost $100. I've already lost $200. Man, and you're frustrated over that, and maybe it'll pull back, and you battle and create all these scenarios in your head instead of just following your setups, following your trading plan, clicking the button. Like we talked about last week, that commercial where they got the woman and getting her comfortable with pressing the button. Maybe you should do that. Spend about 5 minutes and just press your left click button. So you're hesitating, you're battling in your mind, and there's a tug of war going on inside your mind about whether or not you can do this trade, and it starts to intensify again because now you're weighing the fact that you've already lost money. You don't want to miss out though, because but that was my trade. But at the same time, because it's moved, you don't want to get whipsawed because it's already moved without you. And so in the end, you do nothing, and you because you're paralyzed, you're in that battle, you're in that conflict in your mind about what to do. And so you justify this by saying, well, I would have lost money anyway, or the market would have went against me, or that was too risky anyway. But that's not how successful traders do it. Successful traders set up their trade plans, set up their entries, they see them, and they click. As always, thanks you guys for watching. We've had some interesting things going on this weekend, so we're only getting up to things late. So subscribe podcast HTML is get the full version. To become a paid member of Accendo Traders Video Technical Analysis Trading Plans is the video.html. There's our blog, and of course follow us on Twitter. Thanks guys, and I'll see you next time.